The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, so we wrapped up Monday's trade action. Kind of a quiet day. We found a little bit of that strength, was able to hold in the wheat markets. Soybeans under some pressure, corn largely caught in the middle, and cattle had a good day, kicking off a week with a cattle on feed report coming up at the end of the week. We're going to talk about these markets. Joining us now for a conversation, John Heinberg with Total Farm Marketing is with us. John, good to catch up with you, my friend. Thanks for being with us here today. You know, outside of the headline out of the Russia-Ukraine situation in wheat, largely just felt like these markets were kind of quiet. Once again, kind of marked time. Maybe you have a different perspective here, but it overall was just kind of a mixed bag on Monday's grain trade, it felt like.
Yeah, it was very much so. I mean, obviously, I think all the grains got individual stories that they're using right now for their price movement, and corn, like you kind of said, was kind of stuck in the middle between a bean market wanting to fall apart and a wheat market that threw a little premium in today. And, you know, with that, you get a narrow trading range and a product going nowhere in price. And that's really what we saw in the corn market today. So, but again, you got different storylines out there that are moving these markets around. And right now, the one that doesn't have any news overall seems to be the corn market at this time frame.
Yeah, that corn market's kind of peculiar in the sense that there just isn't much to really move it right now. I mean, you look at the fund money and the CFTC data and things like that. I mean, still a pretty heavy short position here by the funds, but overall, I think corn out of the three is probably the one that's marking time the most until the end of the month here in this window, John.
Yeah, you know, corn's kind of in a spot right now. I mean, it's in a position. First off, like you said, we got the funds liquidating their long position. And unfortunately, days like today, they can move some contracts without a price movement, you know, in that regard. So we saw them drop over 40,000 contracts last week, still sitting about 250,000 short. Again, that's as of Tuesday last week when they put the report together and then reported on Friday. You know, there's a couple of things that we're watching very closely. One of them is the Brazilian corn market, what's happening there. It was having a very nice rally when we're rallying up. It was down almost 2.5% on the May futures today with some improved rain forecast coming in to that Brazilian corn crop. Planting there is about 97% complete. It's about 6-7% ahead of 5-year or last year levels. So that crop's kind of in the ground. You know, so it saw a pretty big sell-off actually the last two sessions in the Brazilian corn market. So I think that's a limiting factor. Obviously, right now they don't have an export bid against us, but, you know, the market just doesn't want to get too far away. Then you're running into the other things that you see, you know, the cash markets around the area, just what's going on. You're talking to some producers, all of a sudden they're getting a little basis bump because guys aren't selling here. But the end users are looking for some product. We're seeing some basis movement just to help pull some corn out of the bin. You know, at the same time, we can't rally this too much. Then the export side gets concerned. And if we can't fall apart because then producer sales don't come into play, you add all those pieces up. We get a day like today with a 5.5 cent trading range and a 3/4 cent move on price. So that's at least kind of where the corn market, I think, is right now. It's just kind of just stuck between all these things until we truly have some form of news story. Unfortunately, that probably won't come out until we see the weather after the planting intentions and we start getting the planters rolling here this spring.
Yeah, and I think that could maybe be the same for soybeans. Although, John, we've talked, this soybean market feels like it's got more potential downside risk versus the corn market per se. And I think, too, that acreage number that's going to be coming up at the end of the month going to be very key. What will that look like for corn soybean ratios and more? Soybeans, to me, to your point, kind of wanted to fall apart, it felt like on Monday. Held up okay, but still I'm a little uneasy about soybeans right now, John.
I am too. You got a couple things that we're looking at here. First off, the last leg of this rally was led by soybean oil in terms of its movement and the strength that we saw in the edible oil market. We got that crush report and those soybean oil stocks, you know, still kind of growing at this time frame. I think that weighed on the market. You saw a fairly good turn in the soybean oil price today. Finished today 70 cents a pound lower. Maybe that rally is starting to come to an end. I think that was the reason we saw the double-digit losses in soybeans. With that, soybean meal was also softer today, so those crush margins came apart a little bit here today. The other side of it, we still got to keep an eye on what's going on with Brazil, with the producers. They are selling. This 90-cent rally or 80-cent rally that we've dealt with in the soybean market has aided them as well. So they're moving product here. We're watching those premiums. In other words, what they're offering to the Gulf. Still trading well under $1 or well over $1 a bushel below the United States price. So this market just can't rally this right now, especially with the concerns regarding demand. We need to keep selling beans. And unfortunately, the path of least resistance, at least according to the export prices, is still lower. So we'll have to kind of see how things shake out here. So didn't like the turn last week with the kind of the rough day on Thursday. Didn't do a whole lot on Friday. Broke through a little bit further to the downside today. Just kind of feels like that market has a little bit of air underneath it here. Maybe we can get back down and check some lower levels. Watched the $12 mark on July. Does that hold this week? Okay, 1180 in May is a big area that we fought through on the way up. So I'm kind of cautious here and staying on the defensive side of this thing, at least in the short term, because of that South American supply that's still out there.
And to your point, looking at the charts on the top side of that May contract, I know we've struggled to break above that 50-day moving average. We've done it, but we can't hold above it. Just doesn't feel like this soybean market's got enough juice to break through some of that overhead resistance right now, John.
Yeah, there was a lot of resistance on the May contract, 12.15, 12.16 window. We fell apart there last week, and again retested that this morning, and then fell apart. Now we're back under that 50-day. We got a 40-day moving average sitting right underneath us, so that kind of held us in check a little bit last week. So we'll have to see. I think we do see a break to a lower low tomorrow. You can really see the sellers kick back in again and just take some premium out of this market here. Especially with, again, the competition between the U.S. and South American beans. Right now it's all about Brazilian prices, but Argentina is not too far down the pipeline. They'll be starting to put their bids and offers out there for the export market, and those look to be coming in even cheaper than Brazil.
On the acreage report coming up as well at the end of the month, I'm hearing, I know we're going to get a lot of estimates out this week. I hear some chatter that we could maybe see more corn acres than we think, just because of the way fall application was for fertilizer. I mean, are you hearing any sort of that street chatter, so to speak, when you talk with clients? I mean, do you think we could see more corn acres than the trade is expecting coming up at the end of the month?
And you kind of just mentally think about the numbers going down to trying to get down to that 91 million that the USDA put out on terms of the outlook for them. That seems a little hard to me, especially given where we are in prices of everything here at this time frame. Throw in the beautiful spring, at least up to this point, in terms of getting some things started. So that I think that's a possibility. You've seen some private analyst numbers come out. Some of them, a lot of them are in that 93 million. That immediately gets me thinking about the balance sheet right away. We're at an extra couple million acres over the USDA. That puts an extra chunk of bushels on that pile. That makes that carry out next fall without some demand adjustments get a lot closer to 3 billion than it does 2.5 billion, which makes me a little bit more nervous for that futures market down the road. So right now, I think any number that's higher than that USDA outlook for them would still be very defensive in my mind for the corn market, especially on the new crop side of things.
On the wheat side, I know we got that Russia-Ukraine news over the weekend with the drone strikes in the port of Odessa. I know, thinking of weather, we're going to get some pretty chilly temps in parts of the plains here Monday evening into Tuesday. So maybe both of those together was some of the pop in the wheat markets on Monday. I mean, what's your thoughts there, John?
I think it's a combination of other things too. We got to start looking at, we had all the news about the Chinese cancellations, U.S., Australia, all those things the last couple of weeks here. The market's actually handled those fairly well. You still got to look at the global wheat picture, and things are still a little bit undervalued maybe here. I do like the term we put in the charts here about a week and a half ago. That's a heck of a reversal in the face of bad news. So as long as we can hold above that, maybe we're sideways, a higher fashion just because of the price of global wheat. Now, the Russian story is not going to go away in terms of what they're putting out there for offerings and the amount of the discount in terms of they are to the comparable wheats and the global scale of things. But there's still some room in here somewhere that we could see a little bit of demand, even despite the negativeness that we saw of those cancellations. So, I think the wheat market is trying to put a bottom in here, at least at this time frame. So we'll have to watch there's just a lot of moving pieces. Again, the U.S. is a very small portion of the global wheat supply, and that's one of the biggest thing I think we need to make sure we stay in check with. And is that what happens here is going to be affected by, or be affected by what's in multiple different places. But at the same time, our supply is limited, and any export demand still is friendly. So I kind of like the wheat market, maybe finding a little bit of a floor here. Obviously, I got to be very, very concerned about another breakdown in the prices at this time frame. But just the price action we've seen over the last couple of days, the funds, moving some short positions around, just makes me feel a little bit cautious or optimistic here that maybe we got some price floor that might hold for a little bit in this time frame. But again, wheat is a nervous animal when it comes to price movement.
We are joined today by John Heimberg with Total Farm Marketing here on Market Talk. John, let's talk livestock. A pretty solid day of that cattle market on Monday. Like to see that. I wonder, though, if this could be the tale of beginning of the week versus end of the week. We got a cattle on feed report coming up Friday. Have to wonder if maybe this was the trade getting some of its gains out of the way before we kind of go sideways into a report. What's your thoughts on that, John?
There's a lot of little moving pieces here. First off, we had that hard sell-off on Thursday, another reversal to the downside. But the one thing I brought it up to one of my clients today, and not that I'm still going to classify where I was last week, I'm cautiously bullish in the cattle market at this time frame. In other words, my thought process for clients, if you got cattle on the hoof, make sure you got a floor under them. If you've sold those cattle, don't be afraid to own a cheap call just in case, that type of thought process. We had good cash trade last week. We saw even up the Iowa trade up to 190. Okay. I know I had a client talk to me about the same thing, saying that's the first time I ever got that. That's about $5 higher than his cash peak last year, which was later than this. So I think the market's anticipating that. The other thing you look at, we've got a set of reversals over top this cattle market, but each one is still a higher high when we reverse out. Okay, you go look at it. We had a reversal in February, one in early March, and we had the one Thursday, but that's still a set of higher highs to that reversal point. So that tells me there's still a little bit of upward momentum still here. Now we'll see where we go. Retail value is still 310, so we're seeing good support there. Cash market looks good, still seeing support there. I still think it's a market that's going to be choppy. It's going to be volatile. We may have a couple really good days and a couple really bad days. Producers, make sure you're just staying active, focus on the cash market, and maybe let the futures just kind of do its thing. But don't forget about those cheap puts here, just in case something does turn south very, very quickly.
Yeah, good thoughts there. I think I too, again, like many folks could be watching that placements number coming up on Friday. I know we're waiting for some of the early estimates here this week, but I feel like that's going to be the big one that everyone kind of watches again. That could be a driver in this market sentiment as we get into next week, John.
That still is the longer term driver in this cattle market, is the placement numbers that keep coming at us here. And, we'll see the impacts of in terms of those numbers again on Friday and then the next week. You just talk to the feeder cattle guys or the, feedlot guys trying to buy cattle. We got such a discrepancy between the futures price and the cash price right now. That basis is so wide, just makes it hard to protect things at that time frame for people in that regard, just because of the strength of that cash market. So that makes you wonder what the futures market's going to do here. Realistically, it does need to climb to catch up. We got $2-3 higher today. Just kind of reflecting that. And just from talking to people right now, the cattle market in terms of finding feeders is very, very difficult and very, very pricey. So that still just keeps you optimistic going forward.
John, how about that hog trade? I felt like got some spillover from cattle on today, Monday. I feel like, though, too, maybe we're starting to get up against some resistance in these summer month contracts. What's your thoughts in hogs right now, John?
Yeah, nice little push out today. We did fade a little bit off those highs. That's a market I've been kind of cautious of, but the money keeps moving that thing higher. Again, just kind of reflecting back what I said on cattle, a series of higher highs. You go look at the hog market, go look at the June or the July contracts. The last three highs that we've had and we've reversed out of, not so much maybe in June, but in those summer months, that high was a little bit higher than the last one, just showing you there's some buying strength there. I think if the market gets a little cautious, it gets a little expensive up there. And now we're looking at 105 on July today. That just tells me there's probably some really good value to protect there. That's still one of the things I keep talking about is, value versus, the flow of the market. Protect the value when it's in front of you. So, going to give the cash hog market a little credit. We got the index still trying to climb a little bit here, still a few bucks underneath the April contract, keeps that limited, but the trend's still higher on the cash market. And again, it just looks like the demand is still fairly solid here. So, but with that, again, this might be getting a little long in the tooth. I keep talking about that. We've been rallying that summer months pretty heavy since January. Started at 90 bucks then on those July hogs, and today we're at 105. Probably a good window to make sure you got some floor getting built.
Yeah, definitely a good thought there. How about the dairy market, John? I haven't asked you dairy in a little while. I know it's been volatile. Any big notes for us here as we kick off the week on Monday?
We've had a heck of a nasty run in that dairy market, maybe finding some bottom here at the last week or so. We were sitting in 1st of March, end of February, $18 milk in the April contract. Then we take this thing all the way down to the upper 15s in a matter of just a handful of days. Just tells you how much volatility is out there. Got a combination of problems going on now. The biggest focus is on the demand side for the cheese and the products on the export scale, as well as the regional demand or local demands. You got cheese trade 145 barrels, 150 for blocks. That's a really tight spread. That tells us that we just don't have a whole lot of flow in terms of demand right now. That still makes the milk market look soft to me at this time frame. You kind of use the 10% rule. 140 cheese is 140 or $14 milk, and we're still sitting at 16 plus. Feels like maybe we got a little bit of a bottom in here, but I don't think we're going to get going anywhere fast unless we see some turn. But the market still concerns me going forward. Now we're also in a window. Cow numbers are down. Milk production is down. Supplies in fluid milk are getting a little bit tighter here. Does that hopefully give us enough footing that we can get some movement higher? I'm hoping so for the dairy producer, because I know it's been a really tough go here the last couple of months.
John, great stuff as always as we wrap it up here today. Anything final you want to share or reiterate with folks on the show?
Again, we got a heavy supply year for corn and soybeans, at least definitely corn here in the front end. We've had a nice rally. Stay active in your cash market. In other words, take a look at the quotes, see what's out there. I had a couple clients today talking to, next thing you know, they had a 15-cent, 20-cent basis bump just to get some bushels moving. That turned into pretty good value all of a sudden here, and they, they'll make some sales into in this time frame. We still can come back and re-own things over the long haul. But, I'm not done with the downside in the core market. Still a little cautious. We'll have the May basis contracts coming up here around the 18th of April. Like the last two times we had to deal with the basis contracts getting filled. It's been a rough couple of weeks there. So again, just make sure you're aware of that's coming at us again. There's still a lot of bushels out there that need a home. When you get heavy supply years, you get a nice rally. Like, we're still looking at, May's 28 cents off the low today. That's still probably worthy of targeting a sale. And if they give you a basis bump to move it, that's even adds a little more value. So just stay very, very active in the cash market here. And again, protect value when you can.
John, if folks want to reach out with questions and want to talk with you there at Total Farm Marketing, how can they get a hold of you?
Sure, love chat with me anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Don't forget that website of ours, totalfarmmarketing.com. Again, it doesn't cost anything. Pick up the phone, ask a question. Just talk to you about what you're doing, what you're thinking about, what I see on a daily basis, what's going on in your area. Sometimes it's just nice to hear that outside voice to maybe help give you a little direction.
John, always good to talk with you. Thanks for joining us on the show. We'll talk to you again next week.
Sounds great. Have a good week.
John Heinberg there with Total Farm Marketing. That's going to do it for Market Talk today. I'm Jesse Allen. Have a great rest of your day.